Me, Kevin here. I just sold about $1.22 million of stocks, and I wanted to explain why. Do I have big paper hands? Did I just paper hand out of the red market because, well, things went down, or what the heck happened here? Well, to understand my strategy, it's helpful to know a very simple rule that I have. It's a simple rule that I follow, and it comes after one of my other favorite rules, which is don't have more than 20% margin, which I'm right at like 23-ish% margin right now, so I'm not doing this today to pay off margin. I'm okay being right at 23%, so this is really the next rule. And the simple rule is this. When the market is super hot, lower your margin, keep cash in index funds, or diversify into more stocks. I personally, when the market is super hot, like for example, August of last year, when it was just literally, it was insane August of last year, I, instead of putting money into individual stocks that were really taking off, because I don't like following parabolic curves, I put money into things like a basket of index funds, which you could see by going to like metkevin.com/basket. You'll see I've got 4 index funds there, and I kind of split them up into the way I want to diversify them. The really cool thing about August of last year was I looked at that market, I'm like, this isn't really sustainable, I'm gonna prep for a crash, and guess what happened starting September 4th? The market pulled back. And so I was able to take advantage of a market pullback by what I like to call breaking the glass on my index fund kind of style stocks, or my basket style stocks, which could be like a basket of 30 to 50 stocks, or just index funds, which could be hundreds of stocks, right? I'm able to sell those, which usually fall less, and buy the stocks that have fallen more, just as an example. In September of last year, we had a broad sort of sell-off, and the S&P was down maybe like 10 to 12% at one point. But stocks like Tesla were down up to 37%. So I like the fact that if I put cash in, I'm on an appreciating market. I'm riding the appreciating wave, but in a really hot market, I want that spread out like butter. And so that way, if the market falls, which it did in September, worst case scenario, I'm down 12-ish%. Now, I wasn't down 12% on that money because I could have just kept it in cash in that case. Because I invested the money spread out through August, I had gained more than 12% than what I lost in that. So this is why, generally, I want to be in the market. I don't like having cash sitting around. Cash sitting around for me is money in index funds. So when those index funds fell and I gave back some of my returns in the index fund, I was able to sell those stocks or in other kind of like baskets, like metkevin.com/1337 for me is kind of like a basket. It's got like 62 stocks in it, which 62 stocks pretty much has the spread of an index fund, except these 62 stocks are more concentrated in tech, so maybe not as much of a spread. But studies show that once you have 30 to 40 diversified stocks, you have almost the similar diversity as an index fund, if you're actually spreading them into different sectors, which I wasn't. I mean, they were mostly all tech anyway. But anywho, so I take that money, break the glass, buy the stocks that have sold off. Well, I'm basically doing the same thing now. So here's my strategy now. My strategy today is simple, and I call it spring cleaning. I'm going to go around my portfolio and look for a bunch of smaller positions that I have that I created in January or February as ways of kind of diversifying. And I'm going to sell those off and then concentrate my portfolio without going more into margin. So here's the beauty. I get rid of and clean up all of the small positions I have that aren't going to move the needle anyway. Like a stock that has $10,000 in it for me is not going to move my portfolio at all. Like it could quadruple, and it's not going to do anything for the portfolio. And so while it's nice to have money kind of spread out into different stocks, I want to spring clean, sweep up all of these into a nice bucket, sell them, and take that money without having to take money out of margin and dump it into my high conviction plays. This, again, for example, spring cleaning. Now, since some of these were acquired between like October and November and December and January, most of this should be relatively tax neutral, though there will be gains because net there are gains, but relative to the money I freed up, it's going to be pretty small. So I'm not too worried about taxes in this. Obviously, if I had accumulated this money 5 years ago, I probably wouldn't sell because the taxes would be way, way, way higher. but I created a bunch of new brokerage accounts like M1 Finance, Robinhood, and I transferred money over to Chase in November. And there are a bunch of stocks that have sold back down to their November lows. So I kind of feel like, I can do something paying a small amount of taxes relative to the portfolio, totally fine, and really concentrate down into my favorites. And just for comparison, a $22,000 stock in my portfolio makes up 1/10 of 1% of my portfolio. So like I said, even if that stock moves really, really well, and even though I might like that stock, it's just not worth keeping it. So here's specifically what I did. I'm just gonna name some of these because I sold like somewhat around like, I don't know, 55 different stocks. It's a lot. But here's just an example of some of them. Shopify, 59K, GM, 8.4K, Spotify, 7, Beyond Meat, 37, Purple, 25, Carnival, 16, Win, 25, Fastly, 25, Delta, 12.5, eBay, 11, Microsoft, 13, Facebook, 14.2, Domino's, 4.3, Netflix, 30, Fisker, 2, Walmart, 30, Snowflake, 18, Tattooed Chef, 61, Cloudflare, 18, Target, 13, Twilio, 40, Blizzard, 29, Qualcomm, 61. Now, you might be wondering, like, gosh, Kevin, like, why do you have all these small, odd numbers in all these different stocks? Well, it's because of my M1 Finance pie, metkevin.com/1337. Like, I really like that because it really is able to broaden me out in terms of the stocks that I'm investing in with just a click of a button. It's like, oh, cool, I've got another batch of money, put it into the pie, and it spreads it out. But again, now my goal is concentrating. So I ended up selling $1.2 million worth of stocks in total. That was just sort of a short sample of all of them here. And then what I did is I bought the following, which I'll go ahead and put these up on screen. So here's what I bought. This is, for example, what the M1 Finance looks like. So at the top here, you could see sells of 798 and buys of 798. And we got these 14 buys. And so this is just on M1 Finance, and it shows you here, I put 39 into EXPI, and that's already a concentrated position. So even though it's like, oh, well, 39, Kevin, did you just like sell 39 in one stock to put 39 into other? Yes, but these are positions that I've got big numbers in already. Well, like each of these positions that I have is at least, probably now today, a $300,000 figure, which and some of these are quite a lot more. And I know I'm just saying these numbers so you could try to relate it to your portfolio. Just change the percentage average or the weight, so to speak. I've given you enough detail in this video to already figure that out. But anyway, the point is I'm concentrating into those that, in my opinion, are at decent levels, that have sold off, at least relatively, and I don't mind adding to. So you can see here we've got EXPI, Wayfair, Peloton, Square. Square's a little bit higher right now, so not ideal, but with M1 Finance, M1 Finance, you don't have all of the luxury of just kind of manually choosing things. You can, but I kind of just put it into my pies and let it do a little bit of a rebalance because I closed out my 1337 pie and moved it into new pies that I'm making, which I will reveal soon. Talked with course members about this morning and explained this all in big detail about the new pies that I'm making and the new things I'm concentrating into. But this kind of gives you an idea of what that's going to look like already. Palantir, 82, Pinterest, 15, Redfin, 33, Disney, 39, Tesla, $262,000, CCIV, Matterport got almost 100K, AMD, Ubiquity, and Lemonade also got funding. But that's just one set. This was another set. This came from JP Morgan. And they kind of gave me a spreadsheet of, okay, Kevin, these were the trades we did for you. And so you could see 145 here went into Tesla, and then very similar, right? We've got Enphase, EXPI, GHVI, Palantir, Peloton, Redfin, Pinterest, Etsy, Lemonade, 431. And the other was the 98 figure. So this kind of shows you what I sold, and it's really just to triple down essentially on my top 10 to top 20 positions. So I'm really concentrating. Top 10, I really want to be like 70 to 80% of my portfolio. Top 20 should be like 15 to 20% of my portfolio, that next set of 10. So top 10, 70 to 80%. Next set would be the next top 10, and that would make up somewhere around 15 to 20%. And then maybe some miscellaneous like swing bets or momentum bets can come after that. So in my opinion, given that some of these names, like even Tesla, have sold off nicely, I'm able to make this transition at a pretty good price point to get into Tesla and some of these other stocks at, in my opinion, nicely sold off prices. And so in my opinion, because I'm getting into these at lower prices, I'm going to be able to boost my ROI substantially. Now, usually when I do my projections, I'm looking for a double in 5 years on a conservative basis. With some of these numbers, I like Matterport or even Tesla, certainly Palantir, Lemonade. Some of these positions, I mean, almost all of them, I could see all of these at least doubling within the next 5 years, which works out to a 15% ROI per year compounded. So it's like 15, 15, 15, 15, 15, whatever, 5 times. But because some of them have sold off so nicely, I think I'm going to be able to triple some of these in 5 years, which really works out to more like a 25% annual compounded rate of return. That's like 25, 25, 25, 25. Now we'll see. Don't have to be right. I would love to be right, but that's kind of what I'm gearing towards with this investment decision. Now, I have to be realistic too. I recognize that the odds of having a compounded return of 25% over the long run over a portfolio is relatively low. Now, 2020 was an anomaly for many of us. We had over 150, 200% returns on our portfolio. I know, I'm one of them. I'm very grateful for that. But I also realize over Warren Buffett's career, his average compounded rate of return was 17%, which is slightly more than a double every 5 years. So if I could beat that, great. If I miss and maybe I ended up being too concentrated, oh well. These are the ones that I know when they go down, I laugh and I buy more. If I'm too spread out and sometimes stocks go down and you don't have super high conviction in them, you might look and go, man, why do I have this anyway? And that's not good. Like you don't want to sell when things are down. Now, fortunately, because I sold and bought at the same time, it's not like I've taken any money out of the market. So yes, some positions I've sold at lower prices, but I'm also buying at lower prices. So that's okay in my opinion. It's just really a way of concentrating my portfolio down. And keep in mind, the things that I sold, they're not necessarily things that I think are bad companies. Like I don't think Shopify's bad. I don't think Beyond Meat is bad. I don't think Purple is bad. I don't think Carnival or Win or Fastly or Delta are bad. I think there are a lot of great companies in what was sold. But I sold them because I don't have large enough positions in them to where even if they do well, they're not going to move the needle. And I'd rather take that money and put it into my really high concentration stocks, or high conviction stocks, concentrate down into those. So all of those stocks that I sold, phenomenal companies, don't get me wrong. But we're concentrating into what I think are going to be the big winners over the next 5 years. I'm super excited about that. We'll see how the journey goes. Oh, I've got 2 of me here. Oh well, so you had 2 of me for a while. I hope you enjoyed it. Thank you so very much. I will see you in the next video. And if you want to see all of the details, the full reveal of exactly every single position that was bought and sold, since I didn't list them all here, that is listed in the Stocks and Psychology of Money course. So check that out, watch lecture 1.0, and you'll get to join and follow along. See those links down below in that coupon code, and folks, we'll see you in the next video.